Welcome, welcome. Good morning, good afternoon, and good evening. Welcome to the Cash Madam. Here we talk about timeless principles about wealth and generational wealth so that you can live your best life while taking care of the generation before you and the generation after you. Today, I had a very, very good question coming from one of my clients asking me what to do when you have a juicy bonus. In her case, it was a tax return. But this also goes for a bonus as well. This is the season and we are getting our tax returns. Before I answer that, I have one assumption, which is that you already have a budget. If you do, then you can go ahead to whatever I talk about. But if you do not, that is the first step. You need to have a budget on your main income, not your bonus, your main income. You have to know how much money is coming in. You have to know how much money is going out. You have to know your expenses and your financial goals and where you want to be in a year, in 4 years, in 10 years from now. Once you have that in place, then we can talk about your bonus. The first thing you need to do, take out your taxes. Oh my goodness, you have no idea how many people forget to do this very important thing. You have to make sure that your taxes are being removed. Now, if you are employed by an employer, usually that is taken out for you, but you have to check, 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 check. You do not want a nasty surprise next year. So please, please check, especially for you self-employed gig economy people. Yes, I'm talking to you. Make sure you take out the right amount for your taxes. If you're not sure, just slice out 30%, 30, 40%. You can't go wrong with that number. Worst case scenario, it'll be over. Okay. If you need a quick rule of thumb, take out 30%. Okay. Then, second, I have two options for you. You can do the easy way or the hard way. The easy way is just based on your budget. The hard way takes a little bit more financial discipline and saying that I am going to forego some amount of pleasure for this. So the easy way is just treat it like an extra paycheck. So for example, let's say you're making $4,000 a month. Oh, that would be awesome, wouldn't it? $4,000 a month after taxes. And you get a bonus of $2,000 after taxes. Then you just treat it as if you got a 50% bonus, a 50% paycheck. You take the same percentages that you normally would in your budget. So let's say your living expenses, which is your house and utilities, are 40%, maybe 50%. Most people, it's right now, especially, it's probably 50%. Then you take 50% of that 2,000, which is 1,000, and you use it. Use it on your mortgage. So if you are mortgaging, you pay it to your principal, not an extra mortgage payment. Keyword, you pay it to your principal. If you are renting, you just save that as an extra buffer for your rent or for a deposit if you need to move sometime soon. Utilities, yes, you do save for your utilities as well. We all know the summer months are coming, and my goodness, that air conditioning bill is going to be a killer. So why don't you just put in an extra 100 or 200 for those 2 hot months of summer where your bills are going to go a little bit higher? You might have tuition, kids. You might have kids, so you have tuition or extracurricular bills. This would be a good time to put that percentage, whatever your percentage is for it. Say, oh yeah, this might be a good time to buy that extra jersey or extra shoes that they might need. That's in the budget that you normally will put in the budget. This is a great time to use that 5%, 2% for it. You have savings goals, whether that is for your emergency fund or your get out of debt fund or your retirement fund, your IRA, your 401k. You put that percentage towards that. That's just an extra. And yeah, you have an extra fund money. So what is that? 5, 10, 15% fund money? Pat on the back for getting that extra bonus. You treat yourself to a nice dinner, buy something that is within your budget. Go for it. That's the easy way. The harder way is what I call the 80-10-10 rule. You know, I love tithes. I believe that that 10% is just a good number for a lot of things. So 10%, I say you give 10% away. You give your 10% is your money, fun money. Do whatever you want with it. Once again, pat on the back for working hard and getting that bonus. And 80% goes directly into wherever you are on your financial journey. If you are in the debt payment stage, then 80% goes into paying off your debt. So whether that is if you're going to pay off the debt with the highest APR or the highest interest rate, or if you're using the debt to, if you're paying off the debt with the highest physical number, like the highest amount, or if you're doing the snowball method where you are paying off the lowest amount first and then using that savings to pay off the next one and using that to pay off the next one. Whatever it is, 80% of it goes into paying off debt. So let's say you've paid off all your debt. You're debt free. What's the next thing? Well, 80% goes into building your emergency fund. Your emergency fund is 3 to 6 months of your income, your monthly income, to shore you over for emergencies. And I mean emergencies, not wants, emergencies. Car falling apart on the highway, losing a job, some kind of sickness or emergency, like you have to go to the doctor for something. That's where your emergency fund will go. So let's say you have your 3 to 6 month emergency fund. Yay, you. Then next thing you do is one of two things. But both are considered investments. The first one you can do is just invest in your retirement. You can add more to your 401k or your IRA or any other kind of retirement fund you do have going on. Sometimes we max that out. I forget, I think this year it's what, 20,000 a year that you can invest without tax penalties. Or you can reinvest into yourself. And what does that mean? That means using your money to pay for things that will cause you to earn more money. And these are not maybe things. These are not investments into what we would call hobbies, things that are just purely for your enjoyment. These are things like paying for an online course, a course in a community college. This could be reinvesting into some kind of business upgrade that will automate something that makes things faster and easier for you to earn money. The criteria is reinvesting in yourself means that it either allows you to keep the job you have right now or to allow you to make even more money. Maybe it will set you up for a promotion, or it will set you up for getting a better job or a higher paying job. That's something that is worth using 80% of your bonus for if you are taking the hard way. So I hope this was very helpful to you. Let me know if you have any more questions about it. And why don't you write in the comment section what you did use your tax returns for this year or last year, or what you're planning to use your bonus for this year. And don't forget to subscribe so that you will be alerted to any new videos I have with questions and things that are going on that will help you in your financial journey. Thank you very much, and hope to see you next time. Have a great rest of your day. Bye, everyone.